Hey everyone, and welcome to the Deep Dive. Today we're going to be diving into a topic that's probably on a lot of your minds if you're listening.
Definitely.
The UAE's Small Business Relief Scheme.
Otherwise known as SBR.
SBR, yeah. Whether you are actually picturing yourself running a shop in Dubai or launching some kind of tech startup.
Sure.
Or even if you're just kind of curious about how different countries support entrepreneurship.
Absolutely.
This deep dive is for you. We've got our hands on the latest FTA guides all about SBR.
Great.
And let me tell you, they are packed
With
real-world examples
nice.
that make even the legal stuff surprisingly engaging.
That's what we like.
Yeah. So we'll definitely get into the nitty-gritty.
Okay.
But first,
Yeah.
picture this.
Okay.
You're running your business. You're hitting nearly AED 3 million in revenue.
Wow.
And you are paying zero corporate tax.
That's the dream.
Yeah, that's the power of SBR.
That's right. But as with most things in life, it's not quite as simple as it sounds.
Right?
There are specific criteria to meet, and exceeding that AED 3 million mark even once
Uh-oh.
means saying goodbye to SBR forever.
Oh, so it's like a get-out-of-tax-free card, but it's got an expiration date?
Yeah, you could say that.
Who exactly gets to play this game?
Well, the relief is open to both individuals and companies,
All right.
but they need to be what's classified as resident persons for tax purposes.
Resident persons.
Yes. It's about where the core business activities and decision-making happen.
So even if a company isn't physically based in the UAE,
Right.
it could still qualify if it's essentially running the show from there.
Exactly. Imagine an entrepreneur living in Dubai, running their business from there, and generating over AED 1 million in a year. They're considered a resident person and could be eligible for SBR.
Okay, so location and revenue are key.
Yes.
What about a foreign company? So it has its headquarters elsewhere, but its main operations are managed from Dubai.
If the big strategic decisions are made in the UAE, they could qualify as a resident person too. It's about where the brains of the operation are, so to speak.
So it's not just about having a fancy office in Dubai. It's about where the real business action is happening.
Precisely. And then there's that revenue threshold.
Right.
The AED 3 million mark. It's not about profit. It's about total revenue.
Okay.
Go over that limit even once, and you're out of the SBR game permanently.
Whoa, that's a pretty big deal. It almost feels like there's a strategy involved in how you manage your business growth if you want to maximize the benefits of SBR.
Definitely.
So let's say you are safely under the limit
Okay.
and qualify for SBR. What does that actually mean for your tax situation?
Well, for that tax period, you're essentially treated as having no taxable income.
Oh.
You get to enjoy zero corporate tax.
Wait, so even if your business is making a profit, you pay no corporate tax? That's incredible. I bet that takes a huge weight off small business owners' shoulders.
Yes, especially in those early, often lean years.
Yeah, exactly.
You're absolutely right. And it's not just about zero tax. The UAE also simplifies things for SBR-eligible businesses, meaning less paperwork and simpler tax returns.
Oh, that sounds like a dream come true for anyone starting a business.
Yeah, it is.
But what about those times when a business might be facing losses?
Sure.
Can they still benefit from those deductions if they're using SBR?
That's where things get interesting.
Okay.
Well, you can't claim tax losses for the period you're using SBR. You can carry those losses forward to future periods.
Interesting. So it's like saving up a valuable credit for later.
It's a great way to put it.
Especially useful if you're expecting those initial years to be tough.
Right.
But you're projecting significant growth later on.
Exactly. And this principle also applies to what's called net interest expenditure, which essentially means the excess of interest you pay on loans over the interest you earn.
Okay.
If you're on SBR, you can't use this deduction immediately.
Right.
But you can carry it forward.
Okay, I need a moment to process that. Net interest expenditure. That sounds a little complex.
It is a bit nuanced, but imagine it like this. You're investing heavily in your business, taking out loans to fuel growth. Those interest payments can add up.
Yeah.
And being able to deduct that excess interest later can make a significant difference to your tax bill down the line.
So SBR is almost like hitting the pause button on certain tax benefits.
Yeah.
But it doesn't erase them altogether. You can reactivate them later, potentially, when you need them the most.
A great way to put it. Now, there's another layer to this that we need to address.
Okay.
The concept of artificial separation.
Artificial separation. That sounds a little ominous.
Sure.
What does that mean in the context of SBR?
It's essentially when a business tries to game the system
Oh,
by splitting itself into multiple entities
okay.
just to stay under that AED 3 million revenue limit and keep enjoying the benefits of SBR. The FTA is very vigilant about this.
So they're not just looking at the numbers on paper. They're looking at the real substance of your business operations.
Precisely. They analyze whether those separated entities
Okay.
truly have distinct purposes
Hmm.
or are simply an attempt to manipulate the system. Do they share the same customers,
Right.
management, or location?
Okay.
Are they financially dependent on each other? These are all red flags for the FTA.
So even if you technically meet the revenue criteria for SBR,
Yes.
you could still be disqualified if the FTA suspects you're trying to pull a fast one. There are serious consequences for that.
Absolutely.
Hmm.
The penalties for artificial separation can be severe. This is where having a qualified tax consultant in the UAE becomes crucial.
Now, before we get into the details of that,
Okay.
let's shift gears a bit and talk about how you actually calculate your revenue for SBR eligibility.
Sure.
Is it as straightforward as looking at your sales figures?
It's a bit more nuanced than that. While sales are a major part of it,
Okay.
revenue encompasses all income generated by your business activities,
Okay.
including things like the sale of assets, interest income, and royalties.
So it's not just about what you sell. It's about all the money coming into your business from various sources.
Exactly. And that's where the choice of accounting standards comes into play.
Yeah.
The UAE allows businesses to use either the internationally recognized IFRS standards or a cash basis accounting system if their revenue is below that AED 3 million mark.
Okay, so the method you use to track your income can actually impact the final revenue figure used to assess your SBR eligibility.
That's right. And choosing the method that aligns best with your business operations
Right.
and provides the most accurate picture of your financial performance is essential.
Yeah.
It can get quite complicated.
And this is precisely why having a qualified tax consultant in your corner is so valuable.
Oh, absolutely.
They can help you navigate these complexities, make sure your revenue calculations are spot on, and advise you on the most advantageous accounting methods.
Absolutely. A tax consultant can be your guide through the intricacies of SBR, ensuring you're maximizing the benefits while staying compliant with the rules.
Speaking of tax consultants, we have a special guest joining us today
Oh, great.
who specializes in this very area.
Wonderful.
They work directly with businesses in the UAE,
Right.
helping them understand and utilize SBR effectively. Stay tuned. We'll be right back.
All right. Welcome back. We're joined today by a leading tax consultant here in the UAE who works directly with businesses like yours, helping entrepreneurs navigate the often complex world of UAE taxes. Welcome to the deep dive.
It's great to have you with us. We've been digging into this small business relief scheme, and it really does sound like a game changer for entrepreneurs in the UAE, but I'm sure our listeners would love to hear from you directly. What are some of the most common questions or misconceptions you encounter about SBR?
Thanks for having me. One of the biggest misconceptions I come across is that SBR is a way to completely avoid paying taxes. It's important to remember that this relief is a temporary support measure designed specifically for small businesses in their initial phases. It's not a loophole or a way to permanently sidestep your tax obligations.
So it's more like a boost to help businesses get off the ground, a way to ease the burden during those critical early years.
Exactly. And it's crucial for businesses to think long term, to have a tax strategy that goes beyond the SBR period. Eventually, most businesses will outgrow SBR and transition to the standard corporate tax system.
That makes sense. We talked earlier about the importance of calculating revenue correctly to determine SBR eligibility. What are some key things businesses need to keep in mind when making those calculations?
The first thing is understanding that revenue goes beyond just sales. It includes all income generated by the business, things like selling assets, earning interest, receiving royalties, and so on.
So it's a much broader definition than some business owners might initially realize.
Absolutely. And having accurate, up-to-date financial records is crucial. The FTA can ask for documentation to verify your revenue figures, so being prepared is essential. This is where a tax consultant can be a huge help.
It sounds like having expert guidance can make a real difference.
Definitely. A good tax consultant can help ensure your revenue calculations are accurate advice on the most advantageous accounting methods and even identify areas where you might be unintentionally overstating your revenue.
So it's not about trying to hide anything from the FTA. It's about working within the system strategically and transparently.
Exactly. And this is particularly important when it comes to those artificial separation rules we discussed earlier.
Yeah.
The FTA is really cracking down on businesses that try to manipulate the system, so transparency and operating above board are more critical than ever.
You work with a lot of small businesses here in the UAE. What advice would you give them about taking advantage of SBR?
My first piece of advice would be, don't just assume you're eligible because you're a small business. Take the time to understand the criteria. Read the FTA guides and consult with a tax expert to confirm your eligibility.
So don't self-diagnose, get a professional opinion.
Exactly. My second piece of advice is to think of SBR as a stepping stone, not a final destination. Use this time to build a sustainable and scalable business.
So think bigger picture. How can SBR help lay the foundation for future growth?
While you're benefiting from SBR, start planning for what happens when you outgrow it. Build robust financial systems, nurture those relationships with clients and suppliers, and develop a solid business strategy.
So it's not just about minimizing your tax burden today. It's about setting yourself up for success in the long run.
Precisely. And finally, don't be afraid to ask for help. The UAE tax system can be complex. There's no shame in seeking professional guidance. A good tax consultant can be an invaluable partner helping you navigate the rules, maximize your opportunities, and ultimately achieve your business goals.
That's fantastic advice. I'm sure our listeners are scribbling notes right now. We've covered a lot of ground on SBR, but I'm sure there are still questions. What's the best way for listeners to connect with you and tap into your expertise?
I'm always happy to connect with business owners and entrepreneurs. I enjoy helping them make sense of the UAE tax landscape.
And we'll be sure to include your contact information in the show notes so our listeners can reach out directly. Thank you so much for joining us today and sharing your insights on SBR. It's been a pleasure. Now, as we wrap up this episode, we wanted to leave our listeners with a thought-provoking question. A question that might challenge some assumptions about SBR.
We've seen how SBR can be a fantastic boost for small businesses in the UAE, offering that valuable get-out-of-tax-free card for those early years. But here's the question that might surprise you. Why would any eligible business choose not to use SBR? Why stick with the standard corporate tax system, even if it means paying more in the short term?
That's a great question. It seems counterintuitive at first. Why leave that tax benefit on the table?
Well, it all comes down to strategic thinking, weighing those immediate benefits against potential future implications. It's about understanding how SBR fits into your long-term goals.
Yeah, it really is fascinating to think that, a business would choose not to take advantage of a tax break like SBR.
Yeah.
But as you said, it all comes down to strategy
Exactly.
and, individual circumstances.
Right. And speaking of strategy, let's circle back to something we touched on earlier.
Yeah.
Those artificial separation rules.
Right.
The FTA is really serious about this.
Yeah.
Preventing businesses from trying to game the system.
Our tax consultant guest mentioned that as well.
Yes.
It seems like a key area where
Right.
expert advice can be so valuable.
Absolutely.
What kind of red flags should businesses be aware of so they don't fall into that trap?
Well, the FTA is looking for substance over form.
Okay.
They're analyzing, whether these separated entities have genuine commercial reasons for existing,
Right.
or if there's simply a way to artificially lower that revenue and stay under that SBR threshold.
So give us an example. What would a legitimate separation look like versus one that might raise eyebrows at the FTA?
Okay, so imagine you have a business that operates a chain of laundromats.
Okay.
Simply splitting the business into multiple entities, each representing a different location, wouldn't be considered legitimate separation.
Right.
The core business activities are essentially the same.
So it's not about, creating separate companies just based on
Right.
physical location
Exactly.
or slight variations in service offering.
Yeah.
There needs to be a more fundamental distinction.
Precisely. Now contrast that with a situation where a company has a valid commercial reason
Okay.
for having separate businesses, even if they operate in a similar industry. Let's say you have a franchise agreement
Okay.
for a particular brand of coffee shop.
Right.
While each franchise might seem similar on the surface, they're legally distinct entities with independent operations.
So a franchise model with its separate agreements and operational independence would be a legitimate reason for having multiple businesses,
Correct.
even if they all sell the same brand of coffee.
Precisely. It's all about demonstrating that the separation is driven by genuine business needs,
Right.
not just an attempt to manipulate the SBR rules.
Right.
And this is where having clear documentation and a well-defined business structure are crucial.
This whole discussion about artificial separation really highlights the importance of seeking expert advice.
Oh, absolutely.
A tax consultant can help businesses structure their operations
Yes.
in a way that is both tax efficient and compliant with the law.
Absolutely. Navigating these complexities can be challenging.
Yeah.
And a tax consultant can provide that peace of mind,
Right.
knowing you're doing things the right way.
It's almost like having a guide through a complex maze.
Yeah.
They can help you find the best path forward,
Right.
avoiding those potential pitfalls along the way.
A great analogy. And ultimately, that's what SBR is all about. Providing a supportive framework for small businesses to flourish in the UAE. It's a fantastic initiative.
Yeah.
But understanding the nuances and seeking expert guidance is key to maximizing its benefits.
So for all our listeners out there who are running a business or dreaming of starting one in the UAE, remember that knowledge is power.
Yes.
Arm yourself with information. Seek expert advice.
Absolutely.
And make strategic decisions that set your business up for long-term success.
That's right.
We hope this deep dive has given you valuable insights.
Yes.
And maybe even inspired you to explore further.
Absolutely.
The world of business in the UAE is dynamic and full of opportunities.
For sure.
That's it for this episode of The Deep Dive. Thanks for joining us on this journey into the world of UAE small business relief.
Thanks for listening.
Until next time, keep learning, keep growing, and keep diving deep.